I think inflation is good for the market as long as it's not increasing too fast. What you're seeing, Greg, today is Canadian banks, more specifically the U.S. banks, really outperform because inflation kind of spurs rate increases or potential rate increases.
Hi, it's ggoernert, Vice President and Senior Investment Advisor at Canaccord Genuity Wealth Management and ggoernert Wealth Management. Now, welcome to the channel where we help you make sense of the financial world. Now, if you like my content, like my videos, please hit the subscribe button, drop a comment, let us know what you'd like to hear in the future. We'll really try to get them on. Today, I'm going to be joined by Canaccord Genuity, Canadian banking analyst, Scott Chan. Scott, how are you?
I am doing very well, Greg. How about yourself?
Good. The big news that we've got today is, or for the past week, is a China crisis and concerns about if we're going to have some contagion over into the North American markets, Canadian banks. I know you put a great report out about 3 weeks ago showing Canadian banks really supported by some strong growth recovery. Why don't we talk a little bit about that?
Yeah, sure. The China Evergrande situation, in terms of the banks and life goes in Canada, they've got no real direct exposure. If so, it could be very minimal. As you know, on the life co side, Manulife and Sun Life have large Asia operations. Manulife in particular doesn't have any direct exposure there, and I think that was the worry from investors when it came out. From the Canadian banking side, from what we can gather right now, only BMO has some direct exposure, but it's not material to its operations. And when I look through North America and select U.S. banks, there doesn't seem to be much exposure when I kind of scan through select balance sheets. So there is contagion exposure, but in terms of direct exposure to my financial coverage universe, it's very minimal or very modest.
Okay, that's good to hear. The other elephant in the room right now, inflation expectations and inflation. How does that affect the bank's bottom line, credit facilities, and the overall mortgage portfolio? What are your thoughts there?
Well, yeah. So, I think inflation is good for the market as long as it's not increasing too fast. What you're seeing, Greg, today is Canadian banks, more specifically the U.S. banks, really outperform because inflation kind of spurs rate increases or potential rate increases. And from the U.S. market side, from what I've seen over the last couple of days, some of the economists have actually increased rate expectations next year, which would be positive for banks, specifically regional banks in the U.S. that are performing exceptionally well over the past couple of days as a result of it.
Okay. Well, hey, why don't we step back just on the overall look for the Canadian banks? Because as you in your report that you came out, things seem to be improving for them. Last time you were on the show, we talked a little bit about at some point maybe some share buybacks or some of the changes that you could see on the horizon with the OSFI rules. You want to comment on that just a little bit?
Yeah, to tell you the truth, because of the election, Greg, OSFI's been very quiet over the past few months. Talking to the management teams on Canadian life goes and banks, it seems like the most likely scenario is that they lift the restrictions later this year, or if they don't, early next year. So that's what everyone is watching for because during the pandemic, both the Canadian life goes and Canadian banks have increasingly raised their excess capital position, in support of earnings as well. So both subsectors are primed to utilize a one-time catch-up dividend, and then obviously to reinstitute NCIBs. And we did publish a note recently on that, and the banks that we see that would have the best one-time catch-up dividend would be BMO and National Bank on the bank side, and then Sun Life and Industrial Alliance on the Life Co side would suggest 30% plus increase for those four companies that I mentioned.
Anything else that you see kind of on the horizon right now that we have to watch out for? It's been a strong run in the markets as a whole. Marta Roberge has been just on the show and we were talking about, potential pullbacks at some point. What are the catalysts that you're watching out for right now?
Yeah, so on the banking side, the biggest catalyst is what we kind of talked about in terms of OSFI lifting restrictions, capital deployment opportunities, and how that could have ramifications into 2022. For the Lifeco side, their Q3 is almost ending right now, September 30th. So we believe the biggest catalyst would be Q3 results, and it's shaping up really well, Greg, as you mentioned. The life cos have larger asset management and wealth management arms relative to the banks. AUM growth continues to be very constructive. We think life insurance sales continue to be very solid, and mutual fund and ETF flows have been very, very robust. Looking at the life cos, we think there's potential catalysts on each of them.
Okay, now, just one last point before we head off here. Last time I had you on, we talked about the banks having a large hoard of cash, and talked about some dividend payments maybe coming up, but also you talked about some potential acquisitions once we in a post-pandemic world.
So I don't think you're going to see anything material over the next couple quarters, but you could see some bolt-on transactions from the banks. Like CIBC last quarter bought Loop Capital.
Okay, hey Scott, thanks for joining me. Why don't we wrap it up then? Scott Chan, don't forget to check out my website, ggoernert.com. On it you'll find even more insights to help you make sense out of the financial world. Stick around.